Hey everybody, Sean from Invest to Live. And today we're going to quickly talk about what is Fed tapering? What does that mean? And is it really a big deal? So let's jump right in and not waste any time. So we just got an announcement recently that the Fed is going to be slowing their buying of assets. So they're going to be tapering back for November and December, and they're going to reduce the amount of Treasury securities purchased by 10 billion and mortgage-backed securities by 5 billion. And it expects to continue that pace in the months ahead. But what does that really mean? Well, after our initial crisis back in '08, the Fed introduced quantitative easing. And the idea here was that they want to come out with a policy to start buying these assets from the markets and keeping them on their balance sheet for the long term. This would provide liquidity in the markets. This should help with volatility. Overall, the idea was to instill confidence in the markets that people were buying up these assets. Now, tapering really simply just means they're going to slow down how much they're buying. It doesn't mean that they're stopping. It doesn't mean that this is a long-term policy. What it means is they're going to not buy as much as they have been. Very simply put, they're tapering back on those purchases. Now, the reason it's important to understand how this affects the markets is it can cause a lot of whipsawing. It can cause a lot of loss of confidence. But oftentimes we do see things sort of come back to the norm again. So tapering really simply is the Fed or any central bank of any country ceasing to buy as much of those assets as they normally do on their balance sheet. It can be for any period of time, and it can also change at any given time. What they'll do is they'll continue to look at the overall market activity, see how the economic conditions are they worsening or getting better? And those decisions get made, and they're typically announced so anyone can see them. What I would encourage you to do is look back to see when we've tapered in the past, and other central banks as well, see how that's affected those markets if it's made a significant change. What I will also call out is that a increase in tapering or a speeding up of tapering can often cause very big market reactions. There's actually a term for this called tapering tantrums or tantrum tapers or any other things like that you hear. And essentially what it means is when these announcements come out, we can see a big drop in the market. It can hit individual stocks, indexes, it can really hit anything. So it's important to understand that if there's a sudden drop right afterwards, it doesn't necessarily mean it won't go back up, or it doesn't mean it won't go further down. But it helps if you know what's happened in the past, and you should do that research on your own to feel good about that. So with that said, it's a quick one. Fed tapering is very simply the process of the Fed or any central bank not spending as much to buy assets for their balance sheet, and it can change at any given time by any dollar amount. So with that, thanks so much for watching. I hope this is informative, and thanks so much.